Welcome everybody to another episode of the Business Barbershop Podcast. I am Chris.
I'm Keen.
It's been a while since we've been here. Keen was sick. I think I canceled once. Anyway, it's holiday time. That's what happens. But nevertheless, we are here for a shorty but a
How do you feel
goodie.
about flu shots? Should we start? Should I start doing them?
Yeah, let's just dive
After
right
this
into
last
this.
time, I felt a little bit like, I used to
I've
feel
never
like,
gotten a flu
well,
shot. I've never gotten a flu shot in my life. I don't believe in flu
hmm,
shots unless you're super old. I think they're not junk science, but I think they're just a best guess at, and just have never had them help. So I've never gotten one. Actually,
I
that's not true. I think I only got one time. I think when Allison was pregnant with one of the kids or something.
yep,
And that was just like as a preventative thing for the baby or something. They said I should get one. That might be the only time I've ever gotten one.
makes sense. I used to always just think of it as like, well, if I get sick, I'm going to get over it, and there's a chance I won't get sick. And every time I got the shot, it always made me feel sick, not as sick as if I got sick, but I felt like the odds of being either sick, not sick, and then the difference between forcing it versus not forcing it felt like it wasn't worth it, right?
Mm-hmm.
But and I'm a little older than you, so maybe this is you'll change your opinion when you get into my age. But like,
You're barely older than me.
man, I don't know if it's the bug or if it's the age or if it's the immune system. I don't know what it was, but
How old are
it
you?
took.
How old are you?
I just turned 46.
Yeah, I'm 44.
Yeah, and at 44, I felt like the flu wouldn't hit me at all. It's something. This last time I got the flu, I was like, it was worse than when I had COVID. I couldn't believe how bad it was.
Yeah.
And I don't know if it was the bug or if it was my body's ability to recover. Can't tell. But I thought to myself, like, I remember what it felt like to take the flu shot. And if it meant taking that feeling once a year to avoid never.
Uh-oh, we froze. Let's see if he comes back. We'll pause. And we're back. You didn't know we had some technical difficulties. Keen's computer has a mind of its own.
Yeah, I'm starting to turn to that old man that
Exactly.
struggles
Yes.
with technology.
And get sick from the flu.
Yeah. So my thought was like I started to feel like if it maybe it's overreaction, but it really took me out for 2 weeks and then lingered for the next week and a half. I still have a light cough from it, and I really tried to. In the past, I used to just bulldoze through it, and if I got pneumonia from it or strep throat, I just dealt with it. But I really tried to not let that happen, um,
Yeah.
knowing that I had a lot of work to kind of get through the next couple of weeks. Rested, took time off, minimized how much I talked, drank liquids, the whole nine, and it ended up being like a 2.5 to 3 week fiasco. And I was just like, man, 1 week of feeling like shit to not be out through, but can work through it, right? Because
Yeah.
I think if I took the vaccine and I started feeling like shit, then I could Dayquil, Nyquil through it. But because technically I have a vaccine, right? But then
Yeah.
it it was just really bad this year, and I can't maybe it's overreaction, but maybe it's I can't tell if it's a me thing, if it's a biology thing.
Yeah. Who
I don't
knows?
know.
See, but for me, like, I very rarely get sick anyway. Not to jinx myself, but I mean, I think I maybe have had the flu like one time in my whole life.
Oh, really?
So, yeah, I just don't get sick.
Lucky
So
you.
I don't think I've ever had COVID. I don't think, I just never get sick for whatever reason. So I'm just living right or something.
COVID was interesting for me. It was the first time I ever had. Um, it was the first time I ever had a migraine, so I got the experience. I hear people explain it. I never ever had it before, but
Yeah.
which is not
Yeah.
a great experience. But you know, the flu I just
Yeah. Never
got
took
over was
a,
much worse than when I had COVID.
yeah. I never took a COVID test or anything, like if I had a cold, but I have never had anything different than like a normal cold, for like a couple days. So
Yeah.
interesting. No, but no flu shots. I don't know. I'm just have never been a big fan. I don't think if you're old, I think they can be super helpful. Maybe if you're young, like if you're a kid, I think they can be helpful as well. But nah, I'll probably get one when I'm like never. I probably won't ever get one unless somebody makes
I
me.
mean, it's worked for you up to this point. I've gone both ways, and my decision to consider doing vaccines has a lot to do with just my recent experience. Like, if this is what I have to deal with moving forward, I'm happy to take a vaccine.
Totally. Yep.
Yeah.
Yep. I mean, the flu vaccine's pretty standard. I don't think they're doing a
Mhm.
lot of crazy science with it. They're
No.
just picking the variant that they think is going to be prevalent this year and then weakening it and putting it in you, basically. So,
Yep.
okay, cool. We haven't talked, have we talked since the election?
I think we might have once, but the markets have done the reactions. I thought we could do a really quick recap of what we're seeing the market doing.
Yeah.
And then discuss a little bit about our own forecasting a little bit.
Sure. Let's go. You want to go first? Or you want to give
Yeah.
the recap?
So Bitcoin just broke 100,000. Everyone thinks
Yes.
that Trump is going to be a lot more friendly for crypto. I personally don't really care.
Yep.
It can go to 400,000 overnight. I'm still not going to touch it. And there's nothing against Bitcoin. I think that I've just taken the approach that it needs to be something that when I look at it and I study it and I can come up with a marketable price of what I think the asset's worth. And I've just listened to Warren Buffett for too long. I think that people, it's not just that he's anti-Bitcoin, because obviously he is, him and Charlie were, but even just the philosophy of how he invests. I think there's people who, like my other friend Chris, who we've had on the show before, Chris Stewart. I would say that he's a great example of a person who does invest in Bitcoin and or Bitcoin related industries or investments, but he does it in the capacity that the way that Buffett talks about how you should invest in your circle of competence. And it's in the circle of competence, and he has a value for what he thinks it's worth and a value where he thinks it's going to be. And if it seems undervalued, he invests in it. And I think that should be the foundation of every investor, that you understand the investment, you understand what you think it should be worth, because then if it goes down after you bought some, you shouldn't be second guessing your evaluation. If you are, then you didn't do a proper evaluation.
Yeah.
Or sometimes you'll make an evaluation, it won't go the direction. You'll study why it didn't go the right direction. And if your studying was wrong, then make a correction. Don't stick to it just because you were wrong, hoping it'll recover. That's not a good philosophy either. But if everything you analyze was done right and it goes down after you bought it, it should only get you more excited. It's the way I try to describe it to other people who ask me about investment advice. I tell them, if you've been think of something that you as a consumer bought on a regular basis that's expensive, that you pay attention to the market value. I think a really good example would be like your iPhone, right? New iPhone comes out, everyone knows that it's going to be around $1,000, more than 1,000 for the most premium version with contracts, right? Usually you're spending, and then you can break it up into payments if you want, right? But if someone says, hey, you can get an iPhone 16 Pro Max for $500, anyone who's bought an iPhone in the last 4 years would say, oh my gosh, I gotta go buy one. And if the next week it drops down to $250, you shouldn't be looking back at your purchase saying, oh, I should have bought that then. You'd be like, oh, well, let me go buy my brother one, let me go buy my kids one, right? You'll be only excited to buy more. Maybe how many would the store sell me before I can turn around and maybe flip it to someone else before the sales go away? That's how you would react, because you know what the market value of it is, right?
Yep.
In the world of investing, there's times where things are just undervalued and are worth more. And if the evaluation of why doesn't make sense, then it just might take longer for it to reach that value, right? And if it keeps going the wrong direction before it goes in the right direction, that just gives you more time to invest more into it over a period of time with your earned income, and or also the opportunity to dollar cost it even lower and get your average cost of it even cheaper. If you like it at $100 a share, you should love it at 75, right?
Yeah.
And if you try to forecast, I think the easiest way to think about how you should evaluate an investment is if you said, okay, here's what the value is, here's what the price is, here's what the value should be, here's where I think it's going to go, plus, all the other things that kind of go into it, which is what's their competition, is their share of the market share, right? How profitable are they? What's their margins look like? The price earnings ratio, all the things that kind of go into it, and also while it's going to eventually go back up to its value, what's going to look like if people keep trying to take part of their market share, right? What's their ability to defend against it? And is it an essential business? So there's a handful of factors going to it, but I would say that it's less than 10 factors, right?
Yep.
So that might sound like a lot, but it's just, we make the decisions of what kind of food we want to eat probably based off of a handful of factors, right? Taste, cost, health or anti-health benefits. And, and if you were to put that many factors into how you decide you invest, it's fine. It's people tend to be a little bit lazy about how they evaluate things. And so I think that I think that it's fine if you want to invest in Bitcoin, it's something you really understand, but I think that some people think they understand it and they don't really know what they're looking at. But the industry is supposed to be very friendly towards, they think this presidency is going to be very friendly towards Bitcoin. The other discussion is about the impact of Trump's election associated. A lot of people are talking about massive deportations. I was watching some news about it today. That was interesting. Still forming a view of it. But the discussion of inflation, which is much more, this is a space I'm much more familiar with. Inflation affects rates affect yields of bonds, which affect the mortgage rates, right?
Hey.
Cost of goods and so forth.
Do you want to hear my thoughts on anything?
Yeah.
Or you just want to, is this going to be just one big monologue, one big key
monologue? No, I just wanted to give my 2 cents on these two things and then kind of.
You got to leave it all the way, whatever, even all the way through Bitcoin. You just moved on to the markets.
Yep. No, I'm going to give my sense about inflation and then I'm done. So
how are we going to finish our thoughts on each thing?
What if you want to? Okay, you jump into Bitcoin. You jump into Bitcoin, and then
I thought we were having a conversation.
Yeah, we are having a conversation. I feel rushed because my technical difficulties put us behind our schedule.
What time do we need to leave?
I need to be out the door in about 15 minutes.
Okay, yeah. All right, we have time.
Yeah.
So I agree with you that I think just even the people that Trump has thrown out for his appointments to certain things have been literally more helpful for crypto in general. I think what the crypto community has struggled with is getting the SEC to define, what is a security and what is not specifically, so that people know what to do. What they have been doing is sort of just like randomly going after different people at different times for different things. And when the crypto community has asked for direction, which is what they want, so they know what to do, they just haven't gotten it. So I think they're just happy in general to have somebody that I think is going to create some regulation or some, not legislation, but some sort of a framework for people to work inside of. That's number one. And then number two, what happens is, though, inside of the crypto community, you have a bunch of scoundrels. You really have like a bunch of pump and dump marketers. You have a bunch of charlatans inside of these like diehard crypto people. You have all these other people that think it's just an easy way to make a lot of money. And there's a lot of people that are willing to take advantage
of it. Which causes volatility in both directions.
100%. You also have one of the other things that's interesting, which is not really related to the election. But do you know who? I think his name is Michael Saylor. Have you heard his name?
Mm-mm.
Okay, so he owns this company that was just in doing some tech type of stuff. All right, and like 4 or 5 years ago, he started buying Bitcoin, and then selling bonds based on the Bitcoin, and he has sort of he owns now $1 billion of Bitcoin. But it's like this flywheel thing. It's almost like an internal Ponzi scheme that he's created, where he keeps selling more bonds to buy more Bitcoin. So I'm just curious about if that ever stops, because it's such a large portion, could really cause maybe not really, could cause some volatility inside of Bitcoin. I think it's going to go down again eventually because there really isn't a proven use for it other than its function as a sort of like a digital gold, which I think is important. But I think that takes time for that thing to sort of take effect. And so we'll see. There's also like this, I'm in Facebook groups with people that are like crypto people. So they're always like dropping some stuff. Like there's like some, and Andrew has been talking about this for a long time. What's the company that's been shut down forever? Do you know what I'm talking about?
Coinbase. They're legit. That's the was it Coinbase? I don't know. What was that?
No, it's not Coinbase. It's not Coinbase. But somebody else is anyway, there's some speculation that they're like now they're gonna like get out of the sandbox or whatever and be able to release their coins and stuff.
FTX. Was it FTX?
No, it's not FTX. No, it's not FTX. It's like no, it's a oh, I don't know what it is. I can't figure out. I can't remember what it is. Everybody's probably yelling at us right now. All three people that are listening to us probably know. But anyway, those are my thoughts on crypto. So, where are we going next?
So the next one was inflation. The first reaction to mortgage rates when Trump went in was actually went up, and they thought inflation was going to go in the wrong direction. It was a little quick. I understand. I actually don't disagree with the market sentiment, but also it already started correcting the other direction since then. The first reaction was that rates are going up because they thought the first thing he would put in place are probably tariffs. You have to really dissect all the policies he's talking about putting in place. Tariffs is really just a tax to the countries importing goods to us, and which means that because we source so much of our goods from overseas, like in China, that if tariffs start really pushing up the prices for things, such as like when my wife buys stuff from Shein, right? This website where people buy fast fashion type stuff.
Yep.
That if it's like 100% tariff, all those costs of goods will like literally double in cost, right? But he's also been pushing for us to one of the commodities that's so heavily impactful towards inflation is energy, because energy is used. Well, energy is just used across the board, including the cost of delivering goods. So if the cost of energy goes up, then the cost of delivering goods goes up. The cost of producing goods goes up because it requires energy to do so. And so his energy policies are more anti-inflationary, but by legislation purposes, will just take longer to impact. And so the first reaction was that it was going to be inflationary and that caused rates to go up. Now, that has not been what's happened in the last couple of weeks. In the last couple of weeks, rates have improved. And so, I'm going to give more of a direct, like, where do I think mortgage rates will be? Short-term rates will be aligned with it to some extent. But, I've always just struggled with the idea that rates are going to drop super fast in the mortgage world, because unless we have a black swan event, lower rates literally causes inflation. And if it causes inflation, then the Fed will hold rates higher. So it's like by definition, it kind of creates the soft landing they were kind of hoping for. It's just the soft landing is going to be, soft landing sounds desirable, but a super soft, long landing, starting from rates being really high, is actually very painful. It's the exact opposite. It's an extremely painful process because we're basically saying we're going to make it painful, push up costs to keep the market from getting too inflationary. And everyone who's complaining about, grocery costs and gasoline prices and housing costs. Housing's one of the big ones. It's like we need it to stay high, so it's not going to be bullish for a long time. Which is why, my whole business is helping investors in real estate, and in terms of like time appreciation, I expect us to have the worst 5 years since I've been in this sector, which is crazy that I'm so busy in this space. But it's also because we're in the value add development space. And so I'm telling people, you just have, I'm just basically telling my clients, you have to be really, really mindful that you're doing deals that create lots and lots of margin, because you're not going to get the time appreciation we've had in the last 15 years. But
yeah, aren't the Fed rates though? The Fed rate doesn't necessarily tie specifically to mortgage rates, right?
No, but the levers that make them change it. So the levers that change inflation that will affect bond yields are the
Yeah, but
same
doesn't
data points that the Fed is adjusting their rates to. But you're correct. The two are not directly connected.
yeah, but wouldn't the
Um,
bond yields be changing though anyway? Because one of Trump's major things that he's at least talking about, and that you can sort of see with his platform, with his strategy, is reducing the deficit, which sort of makes those bonds more valuable over time, or not.
Bond yields going down makes the bonds more valuable, even though the yield is
That
lower.
does the yield make the interest rate go up, lower, go up?
When the yields go down, the value of the bond goes up.
I know. What is the interest rate? What happens to the mortgage rate?
The same goes with it. Like when the mortgage rates will go down when the bond values go up, which is when there's money flooding into that market.
Right.
Which it tends that
But
there's a handful of reasons why money will flood into the bond market. There's buyers for bonds all the time, anyways. But the most common lever that normally connects to bonds is the market's flooding to bonds as is one of the places as a flight of safety when the stock market isn't doing as well. When the stock market isn't doing as well, money goes into bonds, and when that happens, it's like people will buy it even if the yields are lower, and the value of the bonds go up.
yeah. Okay.
And then the yields drop.
I've heard also though, like foreign investment in those bonds has also gone way down because our structure is not as strong as it once was.
Yeah,
Because our
I think
interest rates
that
on our debt are now like 50% of our GDP. It goes to interest payments.
normally mortgage bonds move similar to treasuries. That's why most people tell you that if you can't track mortgage bond prices, you track the 10-year treasury. But there is a big difference between a 10-year treasury and a mortgage bond that we're feeling more right now, which is affecting housing. And what that is that let's say, for instance, like the bonds that you'll buy in the mortgage space will usually be 15 or 30-year bonds because they're usually on 50, 30-year notes, right? So every mortgage that's not 30 years, if it's a 20-year, 25-year mortgage, it's still based off of the 30-year bond. So the yield rates are similar. That's why the 15-year rates are so different, is because it's a completely different bond that's being traded with a shorter maturity date. And so 5-10-year mortgages are based off of the 15-year note bonds. And so what happens is those loans, you can keep those fixed rate returns until they mature. So, why is it that a lower rate loan has a higher value? Well, it may not give you the best yield, but people aren't in a rush to pay off those bonds. They can mature either because they've lasted the 30-year life, or if the loans get paid off. And so that's one of the problems with the mortgage industry, is that everyone just assumes that as soon as rates drop, people will refinance out of those loans. And then the maturity date comes, and then you've only earned that yield during that short window. And until they feel like it's normalized, then the yields for mortgage rates will always be significantly higher than the treasuries. So yeah, if I'm an investor buying bonds, I'd rather buy a treasury, even if it's a lower yield, because the maturity date for the mortgage bonds is going to come quicker. You'll get a higher rate of return. It's just you're not going to get it for as long.
Yeah.
And that's the goal of why you want to invest in it. And so, and that's a perpetual problem we've been dealing with, that has a major impact to housing, right? But all I can say is, let's get your popcorn and let's see, right? Trump's a real estate
Correct.
guy, and I think that
Well,
if rates stayed high his entire term, that wouldn't be great for him or his cronies, right? So
yeah. Well, he doesn't care because he's going to be out. So he's not going to care as much because he's not trying to get reelected. So hopefully he just does whatever he thinks is best, regardless of the short-term consequences. That would be my preference. And
I think
4
that's the
years
only
is
reason.
a very, very short amount of time.
Yeah, I think that his incentive of getting rates down has more to do with the fact that he's so heavily invested in this space.
Yeah, but he doesn't. No, he doesn't. He doesn't care. He's a cajillionaire. Like he doesn't have any. He doesn't. Him reducing rates by like a point or 2 points not going to make a significant difference in his life, and not at this point in time. So he's going to be able to speak and do whatever he wants forever and just make money forever. He's got no shortage of income.
I don't totally agree with that sentiment, because those businesses he has are going to his kids, and his kids care.
His kids are already independently wealthy, though. They already have a ton of stuff going on.
Hey, man, there's a lot of people worth a lot of money who, what's happening with rates have blown up people, right? Because in a
For sure.
commercial world, they're put in these like very toxic mortgages. They're kind of like subprime, and now they have prepayment penalties, balloons, and or adjustment rate features, and that's
Yeah.
the whole reason why the commercial spaces got blown up. So it makes these assets get valued based on the way they cash flow. So when rates change and the cash flows change, it changes the values of the assets heavily, and then it starts
Yeah.
to change the actual asset itself. And then you're built, and then now not only you have a cash flow problem, but you have a value and an equity problem. And so there's people who are worth a lot of money who, this increase in interest rates have really kind of, it's we're hear about people who are worth hundreds of millions of dollars who are losing everything because of it. So I do
I
think that
understand, but that's a risk. That's a risk that they're willing to take when they sort of over levered when interest rates were low, knowing that this was likely to happen. So for Trump to be able to undo that is going to be hard, period. No matter what he wants to do. Which, to close the loop as we wrap this up, maybe, I think everything that we're talking about is 100% speculation. I don't think anybody should be making any significant plans unless something is going to drastically affect your business and you can hedge against it. Would be the only time that I would do anything. But until things actually happen, there is no reason to panic. There is no reason to make significant changes to what's happening right now because, what we're working with is, unless you're a federal employee, then I might be looking for another job.
Yeah.
But
their security is probably more at risk than it's ever been before.
Yeah,
No
but
question.
like economic policy wise, I mean, I just think it's going to be it should be a wait and see approach with hedging if you can or need to hedge, in some way. If you're getting a lot of your stuff from China, I would probably, I don't know if you can bulk buy it or pre-buy it or whatever, but you might want to think about, or finding some other supply chain to get what you need at a price that makes your, whatever you're selling reasonable. But otherwise, it's like, these are all guesses. A lot of what he wants to do is going to take legislative action. And, that's going to be hard to do, So.
Yeah. I think there's a real opportunity too for us to try to align with some of the other countries that compete with China for affordable manufacturing, who's a little bit more friendly in terms of their policies with the US. I mean, that was already happening anyways, and there's got to be cheap enough labor in Mexico. Obviously,
sure.
China's trying to do, China's trying to make Taiwan part of them. They're a big manufacturer of affordable goods. Same with Vietnam. I mean, it's crazy because Vietnam, the Chinese helped supported the North Vietnamese during the war, but slowly over time, as Vietnam has tried to take more of a very American-friendly capitalistic approach, but they're still technically a communist country, China has been kind of, I mean, excuse the language, but they're fucking with them. I mean, they have not been friendly to them. Did you hear about a couple of years ago how China just basically stole some land from them and didn't say anything about it? It was like an island that was undeveloped. And then China just came over and developed like some kind of factory of some type. And then the Chinese officials, the Vietnamese officials with them, like, what's this? And China's like, too bad, it's ours now.
Yeah. I mean, all that stuff is crazy. And it'll be
they're really bullying people over there in Asia. And I think there's a really good chance for us. I mean, if they're trying to do a heads up against the United States and, I mean, we'll just see what it looks like. That could all lead to conflict of some type, but we'll see what it looks like. But obviously, it's a conflict that I think that if we try to take the soft approach, it hasn't been working well for us. And so I think that's part of Trump's approach, is to try to take more of a strong stance against what's happening. Plus, those countries, they do, people wonder like how it's going to impact us to do tariffs one way, but technically it's for sure happening the other direction. You know how much it costs to own like a luxury car in Vietnam? In US dollars, it's at least 2.5 times what we pay because of the tariffs.
Yeah.
If you want to own a Mercedes C-Class, it's going to cost you like $160,000 in US dollars there because of the tariffs. This is like an entry-level Mercedes.
Right.
And that's, so the tariffs already happened the other direction. So we're just talking about leveling the playing field.
Yep. Yeah. 100%. So it'll be interesting to see what happens.
But my prediction for interest rates is I think that mortgage rates will close the year in 2025 with an average just under 6.5. somewhere between
What's it at, right?
6.45 and 6.25. It's right about 6.5 now.
Yeah.
And I think it's gonna have an average right around between 6.25 to 6.4. So
Yeah,
we
but that's
might
still
hit
that.
6. We might hit 6,
People,
maybe cracking high fives for a hot second. But people with C5s are going to go nuts, and it's going to go pull right back up. And it's going to do the same
Yeah.
thing it did before. We're past the peak. The peak was the fall of 2023. They hit 8%.
Yeah.
If you look at the averages, right, the average of 24 was higher than the average of 23. But in terms of like just the absolute highest it was ever at, it was in the fall of 23. We're past that, and it's kind of just like a buoy, kind of bouncing up and down, and it's going to keep doing that.
but
Unless we have a black swan
6.25
event.
traditionally is not that bad. The
No,
problem is people saw threes and they like feel like
and
that's the way
it
it should
adjusted
be.
prices, and prices have been very strong and resilient to the high interest rates. Where values have actually gone up. The bottom of the market for value was in the spring of 23 for most areas. So the values went down when rates went up, and then the value's been going up even though rates have stayed high over the last couple of years. Not rapidly, 1 to 3% across the country is kind of where that's been. I just think that's what we're going to get. We're going to get 4 years of one, maybe 4 years is a long time, but I would say that at least another 2 to 3 years of 1 to 4% appreciation, and rates ranging between 5s to 6s for the same window of time. It's just going to be a slow, gradual. And then
but that's the way it's supposed to be.
Mm-hmm.
The way it's supposed to be. That's the way it was up until COVID, basically, right?
Right.
I mean, here in pockets you get more appreciation in some pockets than other pockets, but interest rates are supposed to be relatively steady. That's like the point.
Right.
You don't want a lot of volatility really one way or the other necessarily. I don't know what the magic middle point is. Maybe it's a little bit lower than 6.25, but
I think the middle point. I think the middle point will be in the 5s, and then we'll get back to normal appreciation levels.
Yeah.
I think that between 5.25 to 6% will be the norm.
Yeah.
And I think that businesses need to be adjusted around that.
Yeah. Yeah. Definitely. All right. Cool. Well, it's time for us to go.
Yeah.
It was good. Glad we got to meet since it's been a few weeks, and that's it for today. So if you guys have comments, let us know. We're not going to see them probably or respond to them, but maybe we will. If you have questions, let us know. We may or may not answer them. And if you're listening, thank you for listening. All right. I am Chris.
I'm Keen.
And this is the Business Barbershop Podcast. See ya.
See you guys later.